Welcome back. This is Lowcountry Money Talk. We've got Phil Bloyd here once again with us at the desk with the Revolutionary Financial Group. Unpacked a little bit about what to do for the end of the year. Phil, lots more to talk about.
Yeah.
So let's talk about what next year is going to look like, because it's going to be here real soon.
Yeah.
And you know, the picture we haven't had a lot of positive things to talk about, really. We're talking about increased inflation, interest rates are going up, we've got market volatility, maybe taxes going up. So people are saying 2023 could be one of the worst years since the Great Recession, which is scaring people a lot. So for our viewers who might be thinking about retiring soon, in the next maybe year and a half, what are they going to do?
Keep working.
Keep working.
No, I mean, they may not have the chance, because with recession comes job layoffs, right?
Right, yeah.
So a couple of things we'll look at here. One, I think that could be wrong, but I would think we'll start off the year in maybe a rough position. But I would hope by the end of the year that we would be in a much better position.
Okay.
But, you know, we've got some things that are causing concern to me a bit. So the Federal Reserve is raising interest rates, right, to deal with inflation. And there's too much money in the system. And I just saw where, you know, Congress has approved another $850 billion in defense spending, so that's almost $1 trillion going in.
That sounds like a lot of money.
I'm all for the pay raises, but I worry about how they're going to spend the other, because they have some lost funds that are quite high. The other thing is this omnibus, so they're looking at spending hundreds of billions or more. So we have too much money in the system, so the Federal Reserve is raising rates because they want to slow everything down.
Right, right.
But yet the government keeps approving more into the system. So again, we're still not going the right way. So the Federal Reserve said, hey, you know, we're looking to get these rates at 5.5%. They're at 4.5%, but we're looking at leaving these rates at 5.5% for a long while.
Okay. What does that do?
Well, so far, since they were wrong about the transitory,
the new word we learned. That's
inflation,
right. Yes, that's right.
They've done everything they said they were going to do. They said they were going to get the interest rates at 4.5% by the end of the year. That's where we're at. So there's been about 4 bear traps, or we can call them bear market rallies.
Okay.
And they've all been based on goofy assumptions that the Federal Reserve wasn't going to raise the rates as much as they said they were. So I kind of stuck to the idea that they were going to do what they said they were so far. And then the 5.5, I'm guessing they're going to do what they said on that too.
And keep that for a while.
So we're going to have a few more rate hikes coming in the first quarter, and then they're going to get them at that 5, and they're going to hold them for a while.
Right.
So when they raise those rates, we're going to start seeing those unemployment rates go up.
Right.
So if I'm a senior and I'm close to retirement, I would really watch my 401k closely.
Okay.
Because, you know, as we always mention, the rule of 100, you know, you take your age, you don't put any more than that at risk in equities. You go more on the safe side with the other percentage. The other problem with that is if I'm getting really close to retirement, I need to make sure that that's looking in place with the rule of 100. Because as we went over in our previous shows, in a typical bear market, the S&P 500 index will go down between 35 and 40%.
That's a lot.
It's down just under 20 as we're here today.
Right, so we're not done.
No,
is what
so
you're saying.
I'm about to retire, or I'm going to get laid off. Pay attention to your 401ks. Do not, you know, let that just blow up and go down another 20%, and then you're out of a job.
Well, and that's what I was asking you a little bit before the show. I mean, what do we do? Are we holding, or are we making some moves? So it's a good idea to take a look. For our viewers who are watching, any quick tips to maybe help them sort of navigate some of this? There's a lot of uncertainty.
Well, one of when people come in to see me at Revolutionary Financial Group, one of the largest concerns that retirees have is, running out of money.
Yes.
So we do have a book that you can go on our website, look up. It's called Will Your Money Last as Long as You?
That's got to be one of the biggest fears, right?
Right. I would recommend they go read that book.
That sounds like a good book to read, because that's a question on a lot of people's minds. So we're going to answer for some of that. We got another whole half of a show for you folks at home, and we're going to do that after this break.